Welcome back to Financial Wellness Planning. My name is Derek Coffey, and I'm the founder of FWP. And the second most important protection component of your financial plan is your health insurance. Just like home and auto insurance, everyone knows they need to have some level of health insurance. They just don't know which one's going to be the right one for them. I've seen this happen countless times where people will just pick the cheapest option that's available to them. And then when they go to the doctor and they receive the bill in the mail, they're relatively pissed off that they have to pay an exorbitant amount of money for their healthcare needs. In this video, we're going to get into those specific components of health insurance. That way you can make informed decisions when open enrollment comes around. Stay tuned. The whole purpose of health insurance is to help you cover your healthcare needs. Each month, you're going to pay a premium to an insurance company, and they're going to provide you coverage for certain types of services. Now, the plan that's going to be right for you is going to be dictated by your specific healthcare needs. If you need to go to a specialty doctor or you need to take high-priced prescription drugs on a regular basis, then a certain plan is going to cover those needs. If you don't go to the doctor very much or you very rarely see a doctor outside of your annual checkups, then there's a certain plan that's going to fit your needs. Now, health insurance plans are typically broken down into two types. You have a PPO, or a preferred provider organization, and an HMO, or a health maintenance organization. And a PPO is going to have the most flexibility. It's also going to be a little bit more expensive. But with a PPO, there are contracted providers within your plan that you can go see, and they're considered in-network. You're going to pay a cheaper price to go see those in-network providers. But with a PPO, you're allowed to go outside of your network to get the services that you need. The care is still going to be covered under your PPO plan, but you're most likely going to have to pay more in the forms of a copayment or coinsurance to go see those providers. Now, because of that flexibility, you are going to pay more if you're on a PPO plan. An HMO, on the other hand, you're only allowed to see the doctors that are in network. Now, if you're out of network and you have an emergency event, then you can go to the emergency room and your HMO plan is going to cover the costs associated with that visit. But when it comes to seeing doctors outside of the plan, then your plan may not cover it at all. Because of the more restrictive nature of the HMO, you are going to pay a little bit less on a monthly basis for that coverage. The way health insurance works, at least in the US, is you pay an insurance company a monthly premium, and in return, they promise to cover your healthcare needs. Now, the thing about that is the insurance company's not going to cover all of your needs. What the insurance company is going to do is they're going to fill in the event that something catastrophic happens. And we're going to go over this shortly, but there are important terms that you need to know when it comes to health insurance. And a lot of those terms have to do with how much money you're going to pay out of pocket before your insurance company steps in. So you're going to pay that monthly premium and you're going to go get the health care that you need, but you may see a bill in the mail after the fact. So what that bill represents is what you owe in addition to those premiums that you pay each and every month. The first term that you need to know is that premium, and that's your monthly payment for that coverage. The second term that you need to know is your deductible. And what deductible means is that you are willing to pay a certain amount of money for your healthcare needs before the insurance company has to step in and begin paying. Once you reach your deductible, then you're going to hit what's known as coinsurance. So once you've paid all of the money towards your deductible, then the insurance company is going to begin stepping in and helping you cover some of those costs. If you go to the doctor and the charge for your services is $100 and you have a 35% coinsurance, then you're going to owe $35 of that. Your insurance company is then going to step in and pay the other 65%. Now, with coinsurance, you may also hear the word copayment. A copayment is a flat amount that you pay to see a doctor. Now, the one thing I want you to keep in mind about copayments is that it doesn't count towards your deductible, but it does count towards your out-of-pocket maximum. Your out-of-pocket maximum is the absolute maximum that you're going to pay in a single year for your healthcare needs. So you reach your deductible, you pay the coinsurance up until you hit whatever your out-of-pocket maximum is. Now, there's a lot of moving pieces here. There are a lot of terms that you may not have heard before. So, what I'm going to do is I'm going to move on to my own personal policy, and I'm going to show you how all of these pieces work. What you see on your screen is my actual health insurance policy. As you can see, we're on an HMO, or that health maintenance organization, which means we have to see providers that are within our network. Our net premium every single month is $79.28. Now, the reason this is so low is because we are on the ACA. So, because our business doesn't offer a group health plan and our reported income isn't that high, we are eligible for those healthcare subsidies. We only pay $79.28 a month for our coverage. The next thing we want to look at is the deductible. Our deductible on this plan is $11,800. So, for the first $11,800 of healthcare needs that we have, we pay for it out of pocket. Now, the healthcare company may have deals with the people that we see, and we don't have to pay the full price of what they charge. But either way, we are on the hook for the entire amount of our healthcare costs up to that $11,800. Once we hit that deductible, we then move into the coinsurance. For our primary care visits and generic medications, we pay 35% coinsurance on any of those services. So again, that same $100, we're on the hook for $35, and our health insurance company covers the other $65. We stay in that coinsurance area until we pay $16,000 out of pocket. So for our healthcare needs in one single year, we could be on the hook for $16,000 of expenses. And that's on top of the $79.28 a month that we pay. So our total healthcare cost for a year, potentially, is $16,951. Now, what I want you to keep in mind is that we are on a bronze plan. So because we pay so little in premium, we're not as risky to that insurance company. We're willing to take more of our healthcare risks onto ourselves. Now, if we were on a silver or a gold plan, we would pay more out of pocket on a monthly basis, but our deductibles and our out-of-pocket maximums may not be as high. But because we don't go to the doctor very often and we don't take a lot of prescription drugs, then a bronze plan fits our need fairly well. The difference between gold, silver, and bronze plans can be quite significant. A bronze plan is going to be that lowest monthly premium, similar to my personal situation. But on the flip side of that, I have the highest deductibles and the highest out-of-pocket maximums available for my health insurance needs. With a bronze plan, your insurance company is going to pay approximately 60% of your overall healthcare needs. You are going to come out of pocket for the other 40%. A silver plan is going to be the middle of the road. Your premiums are going to be middle of the road, your deductibles are going to be middle of the road, and your out-of-pocket maximums are going to be the middle of the road. On a silver plan, your health insurance company is going to cover about 70% of your healthcare cost, while you're on the hook for the other 30%. Now, the gold plan is going to be the exact opposite of the bronze plan. Your gold plan is going to be the most expensive on a monthly basis, but in return, your deductibles and your out-of-pocket maximums are going to be much lower. On a gold plan, you're going to pay about 20% out of your own pocket, and the health insurance company is going to pay about 80%. Now, when it comes to picking which plan is going to be the right one for you, you have to take into account your own personal needs. I don't want you to base it all just on the price. If you don't go to the doctor very much outside of annual checkups, then a bronze plan is probably going to be just fine. Just be aware that if anything major happens, you're going to pay for the majority of those costs out of your own pocket. If you do have to go to the doctor more than just those checkups, or you have to visit specialists, then consider splurging for that silver or gold level plan. Yes, it's going to cost you more on a monthly basis, but because you have lower deductibles and lower out-of-pocket maximums, you may not have to pay as much when you get the treatments that you need. Please understand that health insurance is meant to protect you from the catastrophic. No, it's not going to cover all of your healthcare needs. You're going to have to pay for some of those out of your own pocket. But if anything major does occur, like a heart attack or a cancer diagnosis, that's when your health insurance is really worth the money. I want to thank you so much for tuning in. If this video or any of the other videos that I've put out has provided you value, then hit that subscribe button. If you know someone that's running around with little to no health insurance simply because they don't want to pay for it, send this video to them. That way they can understand what health insurance is actually meant to be. But I thank you so much for tuning in. I'll talk to you soon.